Hey guys, RC Peck here with the weekly review, and I'm recording this a little earlier in the week. What I want to do is I want to answer a couple questions, and then they're actually the questions I'm having in my head, and they're questions I have each week. Every Monday, I ask myself these questions. But what I also want to do is add a fun ticker symbol at the end. It's a symbol that it's super small in size. It's about $300 million market cap, which is pretty small, but if this thing breaks out to new lifetime highs and it's teetering on new lifetime highs, this is one of those things that could go from being worth 300 million to 3 billion. So I want to talk about that symbol this week at the end. Just like last week, I talked about Twitter, how that is kind of flirting with new lifetime highs. And if Twitter breaks out to a new lifetime high, we could see a double in that. So this one, the one I'm bringing up today, is much more speculative. It's kind of fun. And it's a name from the 80s. So anyone who grew up in the 80s, you're going to be very familiar with this name, whether you used it yourself or you bought it for someone. Now, before we get into that, I want to talk about what's going on in the market. And to me, I want to know if the leading sectors or subsectors are going to break out even higher. So coming into this conversation, there was of the major sectors, energy was leading the year. So that is the strongest sector. If we drop down to still significant sized subsectors, we have regional banks. So regional banks are up about 30% for the year, and energy itself is up about 30% for the year. Interesting. Let me bring over my screen here. I want to bring up oil. Interesting. Oil was up almost as good, if not better. Oil itself is up about 30% for the year. So now energy itself, there's a whole huge mess, upper price above it that it's got to work itself through. But I wanted to look at the actual underlying drive of energy, which is oil. And so here you have oil. There's this big sideways trend. Oil clearly broke through on the bottom end. It broke about this $53 mark, a barrel of oil. And you can see it's now up against kind of the mid zone of this range, and it's working itself through. It'll be interesting to see if it does break through here, it's going to absolutely go up to $76. So the question then becomes, if that goes to $76, and if energy doesn't follow, then energy is a place that you really need to fade and just move away from, because with oil moving higher, if you don't see energy also moving higher, energy equity, then that's really telling you that energy's, at least over the shorter term, has kind of run its course. So watching that also too with WTIC, West Texas Intermediate Crude, with that moving up, that's inflationary. And just generally speaking, we have the commodity complex here. DBC is a tracking symbol, but it's the S&P 500 of commodities. Same thing here. If we believe inflation's coming, and by the way, inflation is not bad for the stock market, but we're going to have to see DBC break above $18. So just kind of looking at some things that are going on, oil looks like it's coiling and it wants to break higher. The next place oil is going to want to get to, if it does break higher, is $76, which sounds crazy that it's $76 a barrel, considering it was negative last year. Negative dollars per barrel of oil. And its next major move higher is $76. So we'll want to see energy move higher. Again, I'm bringing this up. If we do see that, that's going to help inflation move higher, which is going to push bond prices lower. Okay, but as it is right now, here's the S&P at new lifetime highs. New lifetime highs are a sign of strength. Of course, guys, capital G, guys and gals, it can correct back. But for the most part, it's in a very strong space. I often bring up VEU, which is All World ex-US, which is flirting, as of this recording, it's at new highs right there. As you can see, it broke above to new yearly highs, which is a pretty big deal. So things are moving higher. I wanted to take this, is the market doing well, not doing well? And I wanted to approach it slightly differently. So ARK Innovation is a actively traded ETF company. Cathie Woods has made a name for herself over the last year or so. This company has brought in tens of billions of dollars of new assets under management. Just pretty incredible. So one idea I had was if all of the ARK actively managed ETFs start breaking down below their major support, then that would be a sign that the market itself is likely to go into a shorter term correction. That means the market itself, the S&P 500, would go into maybe a 10 or 15% correction. So here's ARK Innovation. This is their main fund right here. And if it breaks and closes below 110, that's going to bring some weakness into the market. And I just wanted to have fun and go through each one and quickly see the price point. Here is Genomic Revolution, multi-sector. That's a mouthful. If that breaks below $81, which is about 6% away. Now, I believe that if one of these breaks, they're all going to break this. But notice how they all kind of look the same. They all have the same formation here. And ARK Innovation, its flagship, which is ARKK, has a double bottom right here. So certainly if that breaks lower, I think that's going to give us a short-term correction. Not a crash, not the end of the world, but more of a, hey, kind of cover your positions if you're a trader, because the market could get weak pretty fast. Another one, here's ARKWeb. Again, these all look the same. If you own multiple ARK Innovation funds, you probably think you're diversified, but you're not. You actually own the same symbol, or you own the same investment with different symbols. So you don't want to have 5 or 6 different ARK funds. You can just own one of them and get the full experience, right? You don't want the false sense of being safe by having all these different ARK funds, because as you can see when you look at the price chart, and this is one of the powers of looking at the price chart, you can visually see they all are doing kind of almost exactly the same thing. So you don't need all the different symbols. I got 2 more here. Again, when I look at all these, to me, they look like the same. Now, on the flip side, if they break above their resistance, then that's a sign that the market's got more legs to the upside. And when I talk about the market, I mean the overall market. So right now what I'm doing is I'm just kind of showing you places that if certain areas break down, this one's too soon, space exploration. That basically looked like it already broke down, though it did not break below its April low, which is that right there. So if ARK active ETFs break down, and there's 6 of them, that's a sign that we're going to have some short-term weakness. Okay, now I'm not telling you should trade. I'm just giving you insight like, okay, we're going to have some weakness coming up. The other thing to look for is here's S&P low volatility. So low volatility, these are low volatility stocks. So this is where people go who have to be in equities, but they don't necessarily want to. So a lot of utilities, a lot of staples. You can see SPLV, S&P low volatility, is looking like it wants to break out to new lifetime highs. If it does, that would be another sign that we're going to go into a kind of a shorter term sideways, not a crash, not a correction, just like a choppiness. And I've pointed out this before, but SP low volatility fell 36% when the NASDAQ 100, also known as the Qs, only fell 28%. So this thing fell 8 percentage points more. It was more violent and more volatile to the downside than that super dangerous NASDAQ 100. But if we do see this break out to new lifetime highs, that could be a sign that maybe things are going to slow down for the shorter term. We're going to look, I'll keep an eye on this to make sure that nothing really accelerates, and that if we do have a correction, it's more of a sideways. This is TLT. TLT is the 20-year Treasury bond ETF. I just wanted to see if this black line is going higher, the market is getting scared, and this black line is not going higher. So we don't really see anything happening right now on people moving into bonds. Though bonds themselves, if you just look bonds themselves, this is TLT, not just an absolute price chart. You can see it has moved up a little bit, which should be expected that it happened here because there was buyers that came in there before. So buyers came in at that 134 range again. So in many ways, TLT is really in this sidewaysness here. I would not say people are clamoring to get back into bonds until TLT breaks above this. I give you these price points to show you that there's ways to know when to start getting nervous, when to start worrying. And again, you have to know who you are and what type of investor you are, right? You don't want to go in as an investor and then the market falls 7, 8, 9, 10% and all of a sudden become a trader. That's absolutely going to hurt your portfolio. So you want to get trained to understand how you invest your investment money and how you trade your trading money. Very different. You don't want to confuse the two. So really, until TLT breaks above 144, it's not really a sign that people are nervous. So what's nice is there's a very clear line that we can tell. I've mentioned gold before, and I'm going to wrap this up in a minute, guys. Gold, actually, I want to bring up gold itself, not GLD. Gold above 1800 is the magic number. We want to see gold above 1800 as a sign that gold has stabilized, though GDX is moving higher. And I did mention SLV has just gone sideways. So it's just, I want to show you guys silver. So silver really hasn't done much. It's just really moved between 23 and $29. It's been super annoying for most people, but it's just chopping back and forth. That is not something you want to be trading. You want to wait. Okay, so the fun symbol I have for you, last week I talked about Twitter, and I pointed out, I'm going to zoom out here a little bit. Let's see if I get the whole IPO in. There's the IPO right there in 2013. There's its lifetime high. So Twitter is flirting with its lifetime high again. This is a price that wants to go higher, but it's kind of battling back and forth. I said if this thing breaks at 78, we could see a double on this. It's a small enough stock, 55 billion. It could easily get to 110 billion this year if it breaks above that. Right now, there's just a kind of a back and forth between buyers and sellers. Okay, so here's my fun, here's my fun stock for the week. So this is a company that IPO'd in 2017. It's incredibly tiny. It's Atari. If you guys remember from the 80s, the video game company, Atari. It's over the counter. It's super teeny tiny. It's $265 million in size. And you can see it's also flirting with its lifetime highs. It actually broke out to new lifetime highs. I'm sure brought a lot of people in and then has corrected. Right now it's down from that breakout about 22%, which actually is not that big of a correction considering, let's see, I'm really zoomed out on this, but back in March of this year, 180% up in about 5 weeks. So this is not the faint of heart. But this will be something I want to just watch and have fun with to see what happens with it. Because again, this is something that if it does break and stay above that, call it $1.07. I mean, guys, super flash. Do not do this at home. This is more of just kind of showing you how you want to buy strength and how oftentimes when symbols are flirting and moving around new lifetime highs, there's an increased volatility around that. You have to understand that that's happening. So if you do want to trade it or invest, you really have to understand what you're buying into, and most people don't. So PONG, PONGF, is kind of the fun stock for this week. Okay, thanks guys for being in my world. If you like this, you're gonna love the free course Clarity and Control. Check it out in the description below. And please subscribe because it makes a difference. If you question or you have a concern or a worry or a judgment, but a kind one, meaning I'm not afraid of it, but be kind in the comments. I love comments. I'll respond to them. Thanks for being in my world, and I will see you guys on the next video. Okay, bye.